Hey everybody, this is John. Welcome to the free video. So we got NASDAQ futures here popping up after hours on Google and Amazon. Now Amazon here has had a wild ride. You can see that it's been slingshot around, or maybe is it slingshotted around, but it was up, it was down, it recovered. And at this point, trading at 760, well within the expected move of 45. So from an option selling perspective, that's great. Google, on the other hand, is, at least last time I checked, is enjoying a larger than expected move. So the expected move on Google was $35, and now we're at 1.5 standard deviations. That typically means that we're going to continue going higher. So how did we structure that? So for Google, we did a couple different trades in the earnings class. One is where we placed a bet based on Google staying within its expected move. Okay, and at this point, we're through that. So tomorrow, a simple strategy to offset that is we buy back the short call, or we add a long straddle here just to capture the volatility enough to make this up. Now the good news is the risk reward on this is fantastic. We also bought, and that's a lower risk one, and then we also bought one in case we have, a greater than expected move. And then we did hold some options overnight, which, if we do open up at 810, we'll do fairly well. And that's kind of a standard procedure for the earnings there, and we'll manage it more in the earnings class tomorrow. And then the other one we're looking at getting ready for earnings is Tesla. We've got a huge head and shoulders pattern here on the weekly chart. We're at the fire line. We have increasing short interest, so we've got a lot of interesting potential there. And then some of the other trades that we've done via the earnings class and around earnings is, let's see, we just went through the Google one. We did, Crust, Cirrus Logic, that was a fun one with that big move. Buffalo Wild, good one with that move. Biogen, good with that move. Facebook, good with that move. I mean, it's actually been a pretty smooth earnings season so far. And what I found with a lot of the stuff, it's really just kind of being aware of levels. You just want to know what kind of levels to get in. And one of the reasons I've been paying so much attention to this fire line here is that Carolyn's also been yelling at me about a couple of different things regarding a couple of different stocks. One are cluster zones. And so anytime there's something like that and timing, I get really excited. And some of the biggest trades I've made this year is when I see those two coming together, and usually it's because she's yelling at me and saying, John, there is a cluster and timing. If you're going to take a bigger than average trade and you get a trigger here, that's the time to do it. And those are typically the biggest trades that I've found this year outside of earnings trades. So I've been getting a lot of questions on this, like, John, what's timing? What is the clusters? How do you do, and how do you use the timing? Well, I can't really show you, because I just look at Carolyn's stuff. So Carolyn is going to be doing a class on this Saturday, July 30th from 1 to 5. If you are not aware that these are forces that are in the market and that are marking highs and lows with fairly pinpoint accuracy, then you're simply at a disadvantage. And also, if you will run like a refresher or anything like that, it's a good time to do it. Carolyn is the best one on the planet on this research. This is her work. This is her area of expertise. And the thing is a lot of times if you've ever, say, bought an option and it expired worthless and then you saw the stock move in your direction, it's because you had the timing wrong. And the timing is actually a very systematic methodology of measuring when a stock is going to turn around. And a lot of people aren't even aware that this is a thing, and so they miss out on it. So it is very critical to take a few minutes before every trade and see if your entry lines up with significant Fibonacci timing cycles. If you have a setup plus significant Fibonacci timing signals, your odds of success on that trade increase exponentially. Okay? On the same token, if you have a good setup but it's going opposite of a timing signal, oftentimes that trade won't work out. So if you don't know the timing, you are trading at a disadvantage. So if you go to FibonacciQueen.com/timing, you'll also see a link, I think in your email here. She's going to talk about exactly what I just talked about, plus how to apply precise timing analysis to your entries and exits to add a powerful edge to your trading decisions, actionable, marketable market timing points in the coming week. She's going to talk about what the markets are right now, trading day cycles in both Thinkorswim and Dynamic Trader. Exactly how to take use of the calendar timing feature in Dynamic Trader. And by the way, Thinkorswim has actually modified their platform to fit Carolyn's methodology, and they just recently did some updates. And then very powerful ways to combine Fibonacci price and time analysis. Great stuff. Super, I mean, no-brainer investment in order to kind of get that knowledge and utilize it in your own trading. If you're in the room, you can at least further understand the kind of work that she's doing. It'll be great. You guys have a good one. Looking forward to seeing you on the class on Saturday, and have a good night.